Hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be talking about all the cues for trade, the fact that it's an expiry day, so there will be a fair bit of volatility on the street, and of course, lots of stocks in focus, including the likes of Vedanta, Reliance Industries, MCX, Dixon Tech. So we will be covering all those stocks over the next half an hour, and of course we'll also be taking stock of all your stock related queries with our technical expert on the show. So if you have any queries, send them in to us as usual on our YouTube feed and we'll try and take them up. But before we go any further, let's take a look at the top headlines at this hour. Wall Street ends mixed with the Dow ending in the red. However, Nasdaq and S&P 500 closed with gains, even as Treasury yields hit the highest level since 2007. But Asian markets are edging higher in trade this morning. The GIFT Nifty is implying a flat start, but with a positive bias for the Indian market. Oil prices surged more than 3% overnight, with the Brent inching closer to that $97 per barrel mark. In fact, it has topped $95 already. Rapidly falling crude inventories in the United States, combined with supply cuts from Russia and Saudi Arabia, continue to drive prices higher. Telecom subscription data for July sees Jio add nearly 4 million subscribers, while Airtel gains 1.5 million users. Vodafone Idea continues to give up market share, losing over 1.3 million subscribers. And among stocks in focus, MCX says it will go live with its new commodity trading platform from the 3rd of October, mock trading session to take place on the 2nd. Meanwhile, reports suggest that Vedanta could be looking to demerge its operations. A split is likely to be announced in the coming days. Well, without any delay, let's take let's in fact get on board a technical expert for today. Joining me is Shivangi Sarda, who's the Analyst Equity Derivatives and Technicals Broking and Distribution at Motilal Oswal Financial Services. Shivangi, great to have you on the show. Yesterday, we saw a very smart uptick coming in on the index. In fact, second half saw the Nifty climb above that 19,700 mark. Would you expect the positive bias to continue today, even though it's expiry day, so we could see some bit of volatility today as well, but positive close is what you're envisaging?
Well, good morning. Thank you, Nandita, for having me on the show. So we've seen that, Nifty saw a really smart recovery yesterday, and there has been, a 1,000-point rally, after which it took support near its key retracement level, and which also happens to be near its 50-day exponential moving average, which is around 19,550 odd levels. So we saw that was the exact support which Nifty index took on the previous session. And thereafter, we've seen that the bulls have been in complete action. Now, of course, today is monthly expiry, so we will be witnessing some sort of a good volatility, also because we've seen a quite muted week. So, some action expected today, but onwards and upwards, Nifty is looking quite good for the next level, which is coming out to be 19,888 zones with a support near 19,620 levels. So this is what the index levels are coming out to be. Now, talking about Bank Nifty, we've seen that some of the PSU and small banking names have been supporting the index, although the private banks are still not performing. So for that reason, Bank Nifty is not being able to outperform the index. It is still underperforming from the last 6-7 sessions. Now we've seen that it still tried to see a good support base buying near 44,200 levels. So that would act as a crucial support for intraday 44,200 for an upside towards 44,750 and then 45,000 levels. So buy on decline strategy to continue for both the indices, but of course we will witness a roller coaster ride ahead of the monthly expiry.
All right, those are the levels to watch out for on the index as well as the Nifty Bank Index. All right, hold that thought, Shivangi. We'll come back and talk about specific stocks with you and also take up our viewer queries. But let me also bring on board, Omkar Tanksale, who's the Senior Research Analyst of IT at Axis Securities, joining in. Good morning, Omkar. Great to have you on the show. Over the last few days, we've had a couple of reports on the IT sector per se. We have, the companies reporting their earnings in the next couple of weeks or thereabouts. But, there is a tug of bull and bear when it comes to the views on this particular space, given the fact that FY24 is expected to be bleak. We've seen IT companies give weak guidance. But do you think FY24 will be the end of bad times for IT, and FY25 is when the recovery is expected to kick in? What are your own thoughts?
Yeah, I mean, definitely, there is an, just a sentiment of, that there will be an economic slowdown and uncertainties are going on, but that is not still happening. The inflation rates are not in a still in a control. If you can see a deal wins in Q1 FY24, that stood very robust, and even during the challenging time, the deal closures for in every Indian IT company almost have reported strong set of numbers, which indicates that there is a demand is intact. Currently, they are just delaying the process of the automation because of the uncertainties that they have. But going ahead, definitely there will be a strong recovery whenever there will be a recovery and there will be a confidence from the major players, the top client accounts will start spending in. There will be a strong recovery. On the demand side, if you can see on the technological side, every IT company is now start talking about generative AI. There is a machine learning and the digital transformation. So many things that should be connected. So demand is going to be a one thing that drive the force for Indian IT services, because these are primary vendors for many of enterprises situated in North America, Europe, and every other part of the world, and every other enterprises. I definitely believe the FY24, the second half or the last quarter, may see some sort of a recovery, and FY25 will be again the growth trajectory will be back.
Right, Omkar, when you talk about large cap IT stocks, the valuations are near the 5-year averages now. But do you see any more upside going forward, given the fact that the likes of Infosys have seen a good recovery since they reported their first quarter earnings over the last 3 months? I think Infi is up somewhere around 10% or thereabouts. So would you expect any more upside, and would you look at any EPS revision on the upside for any of these large cap IT names?
Yes, definitely. I mean, if there are there are some sign of the recovery, one might revise their target price. Infi has always been conservative on giving the guidance. They may upgrade the guidance as per the spendings has been started. Getting back on the track. So if there might be an increase in the auto spends, or maybe some projects is getting ramp up during the time, they may increase the guidance range. So according to that, we can also increase our the EPS target going forward. But currently, the kind of targets or kind of guidance have given, we have not revised our EPS target. Currently, coming on to the valuation part, the valuation looks to be lucrative for the IT if you are investing for a long-term perspective, because the kind of growth that we are expecting for FY25 and FY26 is around 9 to 10% CAGR growth rate with a growing ROE. The forward P multiple will be at around 18 to 19 P multiple, which looks to be lucrative going ahead for the Infosys and other blue chip, not only a blue chip but mid cap IT. I'll also suggest that it's going to have the attract the kind of growth trajectory they have going ahead. So it being a lucrative bet according to the valuation, according to me.
Right, when we talk about mid-cap IT, from the engineering, research and development end, Cyient is one stock that analysts seem to be betting on, given the fact that, it has run up quite a bit, but still valuations remain attractive at 20 times 1 year forward. But, in this space, would you also, go in with that thought that, Cyient looks more attractive compared to peers like KPIT, or would you look at some other mid-cap IT name now?
No, scientist looks to be attractive. Why? Because year-end is being very less affected as compared to the traditional IT services companies. It's more of a collapse of banking sector, and BFSI sector is impacted vertically, whereas the mid-cap companies, and especially on the year-end side, like the Cyient, KPIT, and TTS, Tata Elxsi has been less affected as per the business as concerned. In case of the KPIT also looks to be attractive because of the growth trajectory they have. We are expecting around 50% CAGR growth, which is massive, and as compared to Tata Elxsi, it looks to be cheaper because of trading at 50 and 34 P multiple 2 year forward going ahead. But Cyan definitely have the valuation comfort with the growing business that they have, revision of the top client account, the client spends, and getting margin on a stable. The DLM business has been split, and now they are consistent with the margin profile going ahead, and then accessing the newer avenues in terms of the vertical side. Scientists considered to be a lucrative bet.
Omkar, one last question to you. What would be your pecking order when it comes to the large cap IT names now?
Yeah, my pecking order is currently HCL Tech, Infosys, then TCS, then TechM, and lastly on the Wipro side, and on the mid caps, I like Cyan, uh, then Persistent System, Coforge, and KPIT.
All right, Omkar, with that, thanks a lot for taking out time and joining in this morning and sharing your thoughts about the IT names. And of course, we'll touch base with you when the, earnings start trickling in, and perhaps, get your thoughts on how the IT names are faring as and when the numbers come out.
Yes, definitely. Thank you so much for the opportunity.
Thank you. Well, with that, let's also, go back to Shivangi and talk about specific stocks. Shivangi, before I talk about the stock of the day, yesterday we saw Vedanta. That stock got hammered in trade given the fact that, it saw the parent company was downgraded, by Moody's. And this morning there are reports that, Vedanta could list its businesses separately. That could be, could aid in the debt reduction process, right? So that could appear to be a balm for, the kind of sell-off that we saw on Vedanta yesterday. So do you think on the charts, is there, any possibility of a reversal in today's session, or do you think it will head lower from here?
So we've seen that the chart structure, on a monthly basis, it has seen a range breakdown of the last 6 months. And this stock has been in the weakness for, quite a long time now. Even after, small bounces in between, it hasn't been able to sustain the, bounce back. So I feel 206 would be an important level to watch out for. It will be a make or break level. It has respected to this level before. So this level should act out. If it falls, below that level, it could see grave weakness. But then if it holds here, then we could see some sort of a negation. But of course, I would say wait and watch in this stock.
All right, wait and watch is the call on Vedanta. But let's talk about the stock of the day, Reliance Industries. Of course, yesterday the stock ended near the high point of the day, and today, we have the telecom data for with respect to July. In fact, it has added somewhere around 4 million users, and Bharti, it has seen a slowdown in the subscriber additions, and Vodafone, of course, continues to lose subscribers at a rapid rate. But for Reliance Industries in particular, the stock is trading above that, in fact, closer to the 2400 mark. Would you see levels of 2500, perhaps in the next couple of sessions?
Second half of the session yesterday, and it has acted out as a reversal over here. Even it's already below its key exponential moving average, so some sort of weakness can't be ruled out. But then again, the stock is reversing, so we could see some sort of buying, but the buying should be there in momentum. Next levels which are coming out to be around 2430 levels, and then gradually 2500 levels in the coming series. But then the support which is coming out to be for the index is around 2335 levels.
All right, those are the support levels to watch out for on Reliance Industries. But I want to get in your thoughts on MCX as well. The new, commodity derivative platform will go live on the 3rd of October. It was a news break by my colleague Sudarshan in CNBC TV18, and now it has been confirmed. When he broke the news, we saw the stock surge somewhere around 7% or thereabouts. But do you think, the stock could see some bit of selling pressure, given the fact that we have seen quite a bit of a run-up on the stock? What are the kind of levels you'll be watching out for on this counter today?
This stock is, barely started to move, and we've seen a Poland flag pattern breakout formation breakout over here, and follow-up buying can be seen at higher zones, which is quite positive. So, from these levels, I'm expecting a good upside from these levels as well. One could, plan to take the stock. Even, all the exchange-related stocks, because of the various news which are coming out, are looking quite positive. So, even one could look at CDSL for that matter.
All right, that's the view on the exchange, stocks. But let's talk about a Dixon Tech. There is news flow surrounding this counter as well. It has signed an agreement with Xiaomi to manufacture smartphones from its facility in the UP. If you look at the stock, I think it has seen quite a bit of an uptick in the last 5 sessions. 1 month chart also suggests quite a bit of an uptick post 25th of September. Is this a breakout stock, and would you expect this, upward momentum to continue going forward?
We've seen that in the last 5 months, the stock has respected its 50-day exponential moving average on the daily frame, and it now is trading in a different price zone altogether, surpassing all its previous hurdles. There has been good amount of buying from the last 3 days, and good rollovers as we head towards the expiry as well. So the stock is looking quite positive for another 3.5 to 4% up move over here. Now we've seen that the smaller names, like not the heavyweights, have been outperforming in this entire space. So definitely the stock is looking quite positive.
All right, setup looking positive for this. In fact, Debu K had a query on this stock. Hope that answers your query. On that note, let's take up a few queries that are trickling in this morning. Shivangi, crude prices have topped $95 a barrel, and we have seen the shares of OMCs come under a fair bit of pressure. This morning, we have a query coming in from KRK Rao. He wants to know your thoughts on some of these OMC stocks, BPCL, HPCL, IOC, as crude prices head higher from here. Would you say this basket is an avoid for now, or how should one read into this?
These stocks are quite a lot affected with the crude oil prices, of course, and since it's quite news driven and cyclical as well. So we've seen that there has been a lot of outside force acting on the stock. So I would say that the stock is not in in fact, all these stocks are not in much of a momentum. So I would say we could avoid these stocks. In fact, we've seen that there has been a lot of volatility in the stocks which are using crude oil, like Asian Paint, Berger Paint, etc. So I would say we could altogether avoid this space as of now. There are better sectors which are in momentum, like the auto, the small cap banks, and we infrastructure as well. We could focus on that.
All right. Since we were talking about crude prices, we've already discussed platform stocks, but IEX is another stock that we have a query on from Ashraf Ali. Long-term thoughts on IEX, Shivangi?
If we talk about the long term, the stock looks quite good for having it in the portfolio. But if we talk about the momentum, it is not there in place right now, and I would suggest that it is consolidating. So there is not much of a weakness over here. But then again, the upside looks a little capped over here for about 136 levels. 130 would be a crucial support to watch out for.
All right, crucial support zone at 130 on the stock. But we have a query on GMR Infra from Sai Prashant, and he wants to know your long-term view on this stock as well. Infrastructure stocks have been in focus. There have been a slew of order wins, and GMR Infra in particular. Do you think that warrants a buy, or somebody should look at an IRB Infra or some other infra name going forward?
If we talk about this entire space, I feel that L&T is looking quite positive. But if specifically GMR Infra, it is taking some sort of a support. Quite a lot of support-based buying was seen at 56.5 levels. So the stock is looking quite good but it's a slow mover. So of course, one could keep it going ahead, and the long-term view is coming out to be around 63, 64 levels. And 58 would be an important level to watch out for.
All right, 58, an important level to watch out for on GMR. But let's also take up a query on the power space. Power has seen rather power-packed gains, and stocks like Coal India have had a very good run. But talking specifically about Power Grid and Tata Power, which one looks attractive chartically right now?
So honestly, if we talk about the entire power space, there are some of the power finance companies which I'm liking over here. PFC RSC is one such stock, and honestly, this is one space which is quite in momentum, and we've seen that there has been a good amount of short covering and longs being added. So REC, if you talk about, this is looking quite positive for 295 odd levels, and 278 would be a level to watch out for.
All right, those are the levels to watch out for. But let's take up a query on Lupin. One of the viewers has mentioned that he's making a 20% profit on Lupin. Uddeshya, that's the name of our viewer. He wants to know whether he should hold or sell. Do you think he should take profits, 20% profit on this share?
Congratulations on the profit. But the pharma space is quite volatile in terms of, the movement in the Nifty. It moves almost inversely. But then again, Lupin has been doing fairly good enough. And we've seen that after the previous week's weakness, it is again, rebounds. So stock is quite positive. But again, we should keep a strict stop loss, and we should keep, trailing the stop loss so that we can hold on to our profits. So for the current levels, if we talk about the next targets would be around 1160 levels, and 1115 could be a crucial support which could act as a trailing stop loss.
All right, that's the view on Lupin. I hope that answers your query, and congratulations on the profit as well. But last query for today coming in from Mahendra Sharma. Wants to know your thoughts on Mazgaon Dock. These shipbuilding companies have cooled off after the kind of run that they had seen. Would you advise a buy on dips for some of these shipbuilding companies now?
So, in this entire space, Cochin is one such stock which is looking quite positive, and this cool off is of course healthy for the next leg of rally. So we could look at Cochin for that matter for 1120 odd levels, and 1070 would be an important support.
All right, I said that, last query, but, I want to take up one more query. This one is coming in on Indian hotels. Given the fact that World Cup is around the corner and room rates have been shooting up, and what are your thoughts on hotel stocks now, at least for the next 1 month?
As a matter of fact, if we talk about the entire theme, so VBL is looking quite positive. Of course, it's World Cup, and VBL is one stock which can't be ruled out in this theme. So one could watch out for VBL over here. The stock is just come out of its consolidative range on weekly frame, and there has been excellent volumes in the last 3 sessions, which indicates that there has been good buying. So this is one stock which can be looked out for, 1000 odd levels. 950 would be an important level to watch out for as support.
All right, VBL is one stock to watch out for as we enter the World Cup season. I think that wraps up our query segment for today. Shivangi, what are your recommendations for our viewers this morning?
So first on my radar is IDFC First Bank. We've seen that, heavyweights have not really contributed to the Bank Nifty, but then the small names and the PSU names have been quite a lot in momentum. And this is one stock which is looking quite positive. Week on week basis and month on month basis, we've seen that any small declines have been utilized for buying opportunity. From the last 6 months, this stock has gradually shifted its base higher. And now, after a long consolidation of the last 7-8 sessions, it is now, getting ready for a good up move over here. So recommending a buy here with a target of 101 and a stop near 95 odd levels. Now, second pick would be from the auto space. This has shifted gears, and the entire space is quite positive, and from which I'm liking Maruti. The stock has halted near its lifetime high levels, and now again getting ready for the next leg of rally. The good part is that there has been consistent, buying over here, even when the stock was, consolidating, and when the stock saw a little bit of a, correction over here. But then the overall structure is quite positive, and one could look at this stock for, 11,100 odd levels. with a stop near 10,465. Now, the third pick would be from the infrastructure space, which is L&T, which is looking quite positive and supposedly driving the index as well at support zones. This stock has continuously seen a good buying from the last 3 months, and week on week basis, we've seen that longs have been added over here. Now, it has come out of its really long consolidation. So this indicates that there is quite a lot of room for upside over here. Good risk reward at these levels. So recommending a buy here with a target of 3,100 and a stop near 2,900 levels.
All right, those were the stock recommendations coming in from Shivangi. With that, Shivangi, thanks a lot for taking out time and joining in. As usual, it was a pleasure speaking to you this morning. Well, before I go, let me remind our viewers, it's Destination D Street for Yatra Online today. The stock will be listing at 10 a.m. Of course, watch out for that. The issue price was 142 rupees per share. Whether or not it gets a listing pop or not, we will watch out for that at 10 a.m. But with that, we are completely timed out on this edition of Morning Trade. Thanks a lot for tuning in. From me and the entire team, have a great trading day and stay tuned because coming up next is Opening Bell.